Are you guys able to see my screen?
Yes.
Well, we haven't done volume profile, I would say, in quite some time. So I figured it would be good for us to actually kind of revisit some of the concepts so people understand them. Yeah. So I think it would just be good to reiterate when you're new to volume profile, this would be a good session for you to understand why we look at volume profile versus the regular volume that's kind of horizontal in the bottom, and then later on you haven't been in one of the market profile classes is to figure out, why do we combine time and volume, and then of course the price, right, which is our discovery tool. But none of this would be available if you still don't understand the market auction theory, and if you don't really mm, understand that every stock that we have and every price movement is an auction, right? So I think that's where we're going to start. And then feel free to make this a discussion where I'm not the only one talking. My throat's actually drying up. I woke up with something where my joints hurt. But nonetheless, I'd like to make this more of a discussion and open-ended. Feel free to ask questions. We can switch back between the charts as well as the PowerPoint. And the idea is for you to ask as many questions as you can, so that way you can understand it and then look for application, right? Whether it's tomorrow or over the course of time, where it's clicking for you and you're executing trades, right? Your goal is not to immediately start making millions of dollars, and you won't, but it's to slowly understand it and apply. Any questions? Yeah. So I would suggest once we go through the PowerPoint, depending on how far we get, um, it's good for you to also read it to understand it, right? I've embedded some YouTube videos that we've done before. I've added some videos inside the PowerPoint, right? And there's a lot of little nuggets that you guys can utilize for trading, right? If you haven't read the book Trading in the Zone and you're new to trading, or if you've been on the cusp of kind of breaking through, becoming a profitable trader, but you're held back because you have 15 days that you're super green, and then one day the whole thing blows up because you're greedy or not listening to the market. I would really suggest that you read this book and let it become your Bible, right? Let it be next to your on your nightstand and read it every night, 10, 15 pages. Even if you read it 15 times, I would say it's going to help you a lot more than anything else while trading wise. Uh, when we trade, right, when we comment and in the main chat, we talk a lot about volume profile, the language, right? It's important that you pick it up so that way you can stay current. And that's the purpose of this, right? Is to kind of bring you aboard. We have some really good traders in the Discord. I think it'll just help you. When we have the watch list, you guys know that we kind of go through, the basics, right? Where we look at the market, what is it doing? Is it shifting value? Is it, framing down, up? That this will help you kind of grasp that. Okay? YouTube videos, I really suggest that you watch this one with the VP plus TPO. I think it'll help you quite a bit. Right? For today, we're going to focus on the first two bullets: market auction theory and volume profile. But we do have, right, I cover a lot of other aspects, market profile being one of the key ones, and then footprint charts, and then volume anomalies, and mental side of the game, which is kind of what the trading in the zone does. So, nonetheless, market auction theory. Does anyone know what this is? Is there anyone that doesn't? That you're like, man, what are you talking about?
I'm not seeing the PowerPoint change.
Is anyone else struggling to see the PowerPoint change?
I just see Einstein.
Yeah, it shows you on the first. Oh, there it goes.
Let me stop sharing and see if I can fix it. Should have said something. Can you see it now? Do you see market auction theory slide?
Yep.
Yes, sir.
Okay, good. So does everybody understand what market auction is? If you had to put a definition of it, if you're new, what does it sound like to you?
Price goes up and down depending on supply and demand.
So the market itself does what?
Goes from balance to imbalance to back to balance.
So market is just there to facilitate the trade. In the bigger scheme of things, right? We have a bunch of buyers and we have a lot of sellers, and they agree or disagree on the price. When they agree on the price in volume profile world, what are you doing? Are you in balance or imbalance when you agree on the price?
If we agree it's in balance,
Yeah. So if you agree on the price, you're going to build HVNs, right? And typically a POC in volume profile will get their point of control is an HVN, right? Not all HVNs are POCs, but POC is the biggest HVN, right? So when you're trading in a imbalance, right, and the market auction theory, they're just saying we have buyers and sellers that are happy here and they're accepting the price. So how does that play a role, right? So you have the buyers and sellers, right? They have the efficiency, and I would say for you have the buyer sellers as long as they're trading within the balance. That's saying, hey, I'm happy here. Let's trade as much as you can, and then eventually, what happens on the volume profile? And I'm trying to relate all this to volume profile is that you will have a profile that looks more like a D shape, right? Profile. Excuse my drawing, but you get it. So it will be really balanced, and you're going to have a D shape, and that just tells you, hey, we're happy trading within the 68%. What do short-term traders like? What do short-term traders prefer?
Balance.
Balance. What do other time frame traders prefer?
Imbalance.
Or advantageous price, right? They want the price just like we experienced recently on ES, right? We had a lot of other time frame. Remember, we went from the weekly, then the weekly low got kind of broken. We talked about the monthly low. If they reclaim it, watch out. We're going to get that short cover rally. But there was a point where we bounced where there's a lot of important levels from other time frame participants, and they took that as an advantage. Was it as aggressive as we can potentially see? It looked aggressive because they have a total V-shaped recovery, right? But then when you look under the hood, volume has to do what? What does volume have to do with market auction theory?
For lack of a better term, maybe justify the price.
Yeah, it justifies the acceptance or rejection of it, right? If you're trading higher and volume follows and they're participating, that tells you that, first, other time frame participants are there. Second, right, is that they are accepting the prices there. The more price acceptance or HVNs you have, we just said that that's acceptance of value. So volume plays a big role here, right? When you're breaking out of the balance, right? Let's say you have an imbalance, there's only two things that happen in the market. One is that the price is going to be accepted or rejected, right? If you're breaking out from a range and you reject it, there's a really good chance you're going to reverse an auction to the opposite end, right? Because we auction higher to shut off what? Why do we auction? Why does market go higher?
Price discovery.
And what do they search?
Sellers.
Yep, they search for sellers and they're trying to shut off the buying. And the opposite is true as well. Why do we auction lower? Well, you want to stop the selling and you're looking for buyers. And those would be, right, when you think about footprints, some of them are resting orders on the left side on a bid, and those resting orders on the right would be on the sell side, right? As you're auctioning higher, you hit that level and then you just see price kind of go down because you may be hitting an iceberg order or something. So the price, the price always goes from balance to imbalance, and price can only be accepted or rejected. And market is just a negotiation tool that basically matches, me and you guys or anyone else, right? So you have people that want to buy something, and then you have people selling something. If the highest bid doesn't match the lowest offer, you're not getting a transaction, right? If you have the highest bid and the lowest offer price match, and you're going to get an order matched, and then you're going to get a transaction. The more of these transactions you get at a particular level, the more volume is being set there. Therefore, that would be an HVN or maybe a POC, right? And depending on how much you have, which is indicating that there's a price acceptance at that level. As long as you're not breaking, let's say, value areas of prior day or week or month, that's indicating that you're happy there. So I'm just going to go back to the charts so you guys can see it. See the screen with the chart now?
Yes.
When you look at this, what do we have right now from here to the left of this? What do we have? So this is your, I would say this is your 2025 high right here. And then you have, I would say, multiple value areas kind of stacking. So you have the value area high here, you have the value area low sitting right here, and then you also have a value area high from the prior one sitting right here. So when you think about it, market was in a balance prior to the 2 months here, right? We tried to go break above. We're in balance here. We tried to break above. We got rejected. We went down. And as we talked about, if you can't hold the value up top, most likely you're going to kind of revert and visit the whole range back. And they did. They went below. Somebody found advantageous prices, and we're not surprised because they came back to September value area low and a perfect bounce there. They reclaimed the zone. And then what do you see they did after that?
They found balance.
They found balance, but they found it higher than where they previously were, correct? They shifted the value here. And then they tried to shift the value one more time. And here's the new value that they're trying to kind of get in right now. So you had the 2-month balance, and you're breaking out. You have an imbalance. Was the imbalance a really nice breakout?
Not really.
It wasn't really aggressive. I would say it wasn't like it was a vertical imbalance. When you think about imbalances, you want to see some a little bit of vertical movement. Here they broke out and they consolidated, and they came back multiple times. They revisited here, and whenever you go above a balance, you want to watch out what happens when you kind of reach back to that area. Do you defend it, or you kind of slip inside and struggle to get any bid going? Here, as we just identified all these lines, there are other time frame levels. Other time frame being that it's weekly, monthly, quarterly, right? You can adjust it any way you want, but this is telling you that other time frame participants are finding what here? Finding value, right? This is pure value, right? That they're shifting now. But is there anything that doesn't check out that you guys are kind of monitoring to see what happens there? So they had a lot of volume here. What you want to do is you want to kind of look at the volume that we have here. We're trading in the bracket. And then you want to pay attention to here, right? How does that correspond to the volume daily? So you just kind of want to see, is it reflecting there? And then when you're breaking out, what do you want to see? Because this is considered, you're breaking out here. So what do you want to see on the bottom? You don't see an uptick in volume because volume confirms price. And if you're not seeing that and you see it here, look, so you have this candle here at the lows, they're buying it. There's a lot of volumes that came in. Some sellers stepped in. They bought it back up, right? They swept the lows. They trapped the shorts. Then they went in here and then they kind of trapped the bulls on this candle, trapped the shorts again here, and then they really, really exploded higher. But does the volume confirm this breakout? Does this get justified by the volume here?
Yes.
Oh,
With
so
the higher, with the higher volume. in the price movement.
So where's the volume that justifies this?
If you go back to, well,
So this is our average, right?
yeah,
So here's your breakout here.
I'm looking at the gray bars to the right.
So you're looking at
At
this here.
no, I mean on the bottom still, but on the right between the blue.
Okay.
So when it dipped below, there was buyers that came in, and when it dipped to the bottom of that value, that balance, there was volume that came in and pushed it higher.
Okay.
So
That's
those,
fair.
yeah,
So now if you look, the way I see it, right, that you had a lot of value here, not a lot of aggressive buying, and not a lot of volume came in when you're breaking out. Then if you look here, right, so watch this short candle, you're going down. Now watch this one right here. This is kind of like a reversal candle, stopping volume. They bought it back up as we auction higher. The volume kind of died off right in December, and here comes New Year right here starting, and then you can see the volume. We only had volume one time when we went back to the bottom of that balance, and they're saying, "Hey, we like this value here." Other time frame participants stepped in, and they defended it. And it's important to pay attention to this volume because relatively, what you want to know relative to prior days, right, in candles on a daily, are you getting a full body of the candle, and how's the volume? When you do have big candles, you want what with volume? Effort and the result have to be there, right? How much effort and then what's the result like? They should equal. So now when you think about, I would say this candle here that we had on Friday, um, does that check out to you guys? It's like the
No,
highest uh, candle that we've had in some time.
it's a big candle, but not, the volume compared to previous days is a lot lower.
It's nothing, the volume is less, but the body is, much bigger than that. And when you compare it, maybe something comparable to this candle right here, compare it to this one, and then compare the volume, just kind of place it on the bottom right here. This candle had lots of selling here compared to this one here with buying. Relatively, it looks weak. So relative to other price action, this doesn't really check out and confirms that maybe institutional traders are kind of joining this rally. But at this time, you see how many lows we came in here on the top here. Because remember, when the price action wants to go higher, we're in the bracket. They do this. This is bullish. We are shifting the value. And they shifted it again. They rejected it. They came back in here. And then they tried to reject this whole area here with the last candle. And they said not today. And then they had the short-term rally. So now they're trying to back into the penthouse. If they can get back inside here, very high chance that we're going to have, I would say, probably a new all-time high here shortly. If tomorrow, let's say we lose this level somewhere, prior all-time high is at 53, and you lose about that 27, right? I think our 37 is the value area low of December or January, I'm sorry. Then the market's telling you something again, and that's where you use volume profile. So if you look here, this is our January chart. I'm just going to go 4 hours again. More candles. So this is my January value area low. And look where we are. We tried to get back inside here once. We kind of peaked inside. Then we went below all the way to December, right? Value area low. We peaked below. And where did the other time frame people show up? Where do you expect them to show up? Was this expected behavior right here or not expected?
Expected outside
Yeah.
of value.
So responsive activity is expected here. You expected the buyers to step in. And in one of the watch lists that we had, we talked about, there was that 2025 level, if you guys remember, it was like 2025 and some change, like a quarter, like right here. We said if you go above that level and lose it, look at some March puts, right? And target, we talked about $20, $30 less on SPY, if you guys recall. And then you want to not get excited at this area to be short. Well, all of that's true, and all those conclusions were made of just understanding expected behavior, right? Because we are in a bracket now. You're still trading here inside this bracket, right? So let's see. We're gonna go something like this, and here. We are in a 2.5 months bracket now. You do not want to be initiative seller here. It doesn't pay the bills to be initiative seller because you're going to get some responsive activity. And as we approach, right, what you mentioned, right, is that you're building some high volume nodes with some really distinct LVNs, right? So HVNs, right, and I'm just injecting some of the words or definitions here. This is your HVN, right? This is where you have a high volume node. So if you struggle to see it here, now you'll be able to see it, right? You see how much it sticks out. There's a lot of volume here. When you have an LVN like this one here, this is telling you that this is a division between the two distributions. And the last distribution that you have that's being split is somewhere like, let's say, like right around here. So how do you use that as a trader is just that price can be what? We just talked about it. Price typically is either what? Accepted or rejected. So now, if they, let's say tomorrow, they're able to kind of give us a retest somewhere around here, about 21, that'd be a pretty good long. I wouldn't mind taking that and then drive it all the way to this range. Maybe they're trying to build value in between here, which is about 40 points. And it might be choppy and nasty if that's what they're doing. Does that make sense? Because when you're trading with high volume node, who's trading with who? So when you have a short term and you have a balance, is it other time frame traders trading with short term traders?
Would it be short term to short term?
Yeah, it's just short term both. Sellers and buyers on short time frame, therefore short term buyers and sellers trade with each other. A long term traders, like we just talked about, they want the advantageous price, and you will feel it when they come in. Typically, they want the price to be either cheaper or more expensive if they're on the sell side, right? So when you peak above all time highs, right, and they have inventory, they're going to let you have that inventory at the highest prices possible. But when you're going to the bottom, right, market's auctioning to a bottom, and there's no more sellers willing to sell at this price, what typically happens? What happened Friday?
Shoots back up.
Shoots back up, right? You get a massive run because then people that got short at the wrong location, and they're called weak shorts when you short at the bottom, they have a stop loss here, right? So as the price reaches this level and you're short, how do you close that position, the short position at this level?
Got to buy it back.
You got to buy the actual instrument that you're short back. So what do you actually do? What are you doing? You're adding to the fire. You're adding to the fire for higher, and then this is the next short, and people get hit. Now they got to buy to cover. They buy to cover, and it just keeps going. And then tomorrow, what you want to pay attention to is where do we open relative to the value, or where do we close Friday relative to the value area, and it can give you some clues, right, in terms of expected behavior the next day. All we want, as majority of us are, I would say a lot of times, are short-term traders on futures, but maybe a long-term participant on options. We just want a fair price. We want to get in, catch our 10, 15 points, and move on. Does that
I
make
got a
sense to
question.
everyone? Yep.
So when you said like relative to Friday, like when you're trading on Monday, but would it still be very relevant considering like over the weekend, different news or different emotion comes in?
You don't trade emotions. You're trading what the market gave you on prior date, and that's the only thing we have.
I see.
News and stuff, honestly, is as much as they're important, all of that's been already priced in. Market's pretty good at pricing stuff in day to day. So I wouldn't kind of fight that, right? Sure, if we had a World War III over the weekend, would it change some of the aspects here? Of course. I'm not naive not to believe that, but all of that's already, majority of it's priced in.
Gotcha. Thank you.
So here's your Friday price action, right? So you had a lowercase b on Thursday, and then Friday, you open above the value. So if you open above the value, what is the market telling you here? This was our Thursday value, and look where you opened.
Rejecting lower value and want higher prices.
Yeah. So initially, as soon as they did this, right, and when you look at how they did it, they're just telling you, hey, we're not really interested in trading at these prices. We don't have anything to sell. And now when you layer it in on top, when you looked at the monthlies, there are some critical levels here, plus the 6,800 psych level. They came in and they bought it back up. But do you see what they got stopped by? I'm just going to zoom in here. Does everybody understand where they got stopped? Give you a better view.
Like a low volume node or the edge of it.
Oh, the low volume note. So here, maybe you guys can see it now a little bit better. So if you think about this, this is our low volume node here. And they came there and they said, oops, maybe we're not interested in the price trading. Because right now, what we are on here from November, Thanksgiving till now, where's the value? Where's the value based on VRVP? Because remember, we have different tools for volume. This one is just visual range. It's just showing you volume for whatever you have on the chart, including this little guy here. So if I was to add value area high to this guy, watch what it does. Where do we reject?
Area high.
Yeah, it was 2025 value area high.
Oh, you're rejecting the 2025 value area high, and in this case, you're rejecting about 2 months or 3 months worth of data now. You peaked above it, and then is this the place where you want to initiate a long, or what's the expected behavior here you're watching?
Responsive selling.
You want to see the responsive sellers, and did we get that?
We sure did. Last 10 minutes.
Yeah, you got some responsive sellers, right? They gave an opportunity and they took it. They took it by the horns and they kind of pushed the price action down. When you think about the hammer candle here, you opened and you closed here, but at one point this candle was here, right? It was a pretty massive candle there. So it's telling you that there's some selling happening at this level, which is expected behavior. Okay. A good question.
Sorry, I had a question about that regarding the low
Mhm.
volume node. The one you selected, which is like outside the value area, but there's also like a volume area node between like 6910 when you scroll out a bit to show more on the left side. Or yeah, I guess you can see here like around 6920, 6910. There's also a low volume node there. How
Well,
can we determine like that won't reject it as well?
Well, can it? Sure. But look at I would say, look at the zones not only on that like 30 minutes, but zoom out a little bit and identify your zones of higher time frames. So if you look here, I'm just looking at, I'm just going to go maybe on 4 hours. I'm going to hide this so you can see it. Okay. Where are your low volume nodes now? Let's just identify them one by one.
Yes.
Here's one on the top. You have one in here, right? That's the
Mhm.
one kind of talked about, the 20 points. Remember, we also talked about this was the biggest distribution we had at one point, and I'm just going off of the edges, right? Edges to edges here. That one. And then you have these mini ones that are sitting in here. And then eventually you just have to zoom out even more if you have to find out, because then you'll find that there's a massive one here sitting. You see this one here. This is a pretty big node, and sooner or later this will be tested. So you see this now. These would be the critical zones that you have on the higher time frames, right? And that's kind of what I would expect to trade on in terms of, oh, we are approaching, and maybe you have a code for your chart. But typically, my zones, if we're below them, I mark them like orange. So if you're revisiting, I know it's a supply or LVN, and the bottom become green. But at least now I know where the ranges are, and if they trade in here, it's gonna be choppy, right? And this is the LVN kind of I'm watching, and then basically day to day, I'm just paying attention to see whether we had buying tails, selling tails, what kind of days do we have. But as of right now, are they knocking on the penthouse? They're knocking on a penthouse, and if they get rejected here, where do you expect them to go?
So I get rejected at the penthouse.
Like, let's say they get rejected out of this tiny little range that they're building, and you could almost treat this as one, but I would always have caution in this green zone, if that makes sense. The LVN is not maybe as distinct, but this could be treated as one, but there is an LVN there. If you zoom in a little bit, you see how
Mhm.
it's peaking. So in terms of areas, you want to clear, like, you want to see almost like a clear distinction, right? So this is one, this is two. You could treat this as a trader as, 3 distributions, but it's not a bad idea to know where are these opportunities where they can bounce, like this one here. Then you have this massive LVN here, and then the lower you go here, you can see that there's some other stuff coming up. So I don't mind using 4 hours and higher time frame to find the LVNs, and then day to day just to understand how are we approaching, are we finding the other time frame participants using footprints or skinny bellies at the top, like selling tail, buying tail. That's how I would incorporate the two. Use higher time frame for LVNs, maybe not day to day when you're first starting at monthly or weeklies. That answer your question?
Yes, it was it's just in my head. Like I'd stop if I traded at around like the 6,800. I'd stop at the first LVN I hit. So I was just like
Yeah, I mean,
playing
and that's
safer.
fair. Yeah, that's not bad. I mean, you're not going to be wrong.
Mhm.
I think you should be okay with that one, with that approach.
Yeah, it's just that sometimes I feel like it's gonna continue going up, and then I
Well,
get
you have
very
to
uncertain.
respect them. You have to respect the
Mhm.
LVNs because the expected behavior is you're going to have some buyers or sellers show up at the level because they at one point rejected and pulled the price away from it. So now you want to see, for instance, even let's say on 30 minutes here, 15 on Friday, right? They came back here, and I wasn't trying to make this by no means perfect, but it came back here. I think there was a POC at this point. Right? We had some levels identified, higher time frame. There was a POC. I had a POC around 60 here that I was watching, and now when you think about it, the fairest price is here. The LVN is here. This is not a price to initiate alone for me. Right, you're approaching a HVN all the way from like December 25th, and it's an LVN where a division of value is happening. Right? They tried to build value here at the top, but they ultimately failed. So you had a lot of reasons not to initiate here, and you watch for this. Now retest here. Let's say they peak below this level here and they reclaim it. That's a good long, and you go along and play it for 45 points. As traders, we cannot. Your job is not to predict, but what?
Anticipate.
React.
Oh,
You want to react to it. It's better to be late than early when you're trading, right? Let it give you a confirmation, right? And you see like what you're talking about here. Maybe you have a small LVN kind of being built inside. Could you use them? Sure, you could use that. I would layer on TPO, and TPO would give you a better view of those single prints than anything else. And you guys can adjust. I don't want to go in TPO, but you can. I use it because it gives me a better clarity sometimes on, I would say, on LVNs instead of using volume profile, unless you extend it. And I play with the size quite a bit. And you can see here, right? Look at this level right here. There's a little bit of a distribution last month being a double, this show being split here, kind of where we have it. So as long as you're above this level, probably chance that you're going to grind higher and see maybe if we go to the level again, 716. We have a poor high and poor low so far for this month, 8 days in. Okay, so here's a quick question for you guys. Why this always does this? Why can't it default? So can everybody answer these 4 questions? What's the first one?
responsive initiative.
Okay. Anyone disagree with him? think everybody's got the point too. When the price moves up, it's looking to shut off what? Does that make sense to everyone? Because it's kind of like contradictory, right? When you think about it. What's number 3? Does everybody know what the answer is to 3? What's this here?
Balance and imbalance.
Balance.
We'll pay attention to that one and carry forward. And how do you know if a long-term trader has entered a market?
A lot of excess.
Okay, very good. Price doesn't stay there. Like if you come here and it looks like this, that's not a short-term trader. If you come to a level and you get something like this, you want to pay attention and see where those buying tails are at the bottom. Okay, that's good. Any questions on this?
So would like a lower B day and a P day be the long-term traders coming in?
So if you have a lower like profile like this,
Yeah.
it means the longs got liquidated, right? So other participants, right, they had maybe on the ask side, they had a pretty large order, and as they are hitting market buys and it's coming here, they met that one with force, and then phew, and that's what you kind of get here, get that sell off. On a P shape is true as well. You came to a level and they did not like this value here, so they quickly bought it back up. Because the market buys and sells the only thing that moves the market.
Okay, so those would be the long-term traders coming in.
They're coming in. Yeah. Then on a day-to-day basis, right? When traders trade within, let's say, the first period, initial balance, and they peak above and fail, that's telling you necessarily that there's no long-time participant, especially if you don't find access, right? That's just a neutral day and the short term is in control.
Is there a way to tell like the difference between a long-term trader coming in versus like a short cover rally?
Yeah.
Or are they the same?
No, they're not the same. That's a very good question. So usually new business will break the prior levels of resistance, because as you get new buyers to come in, they should just break those levels, right? Where it's massive volume pickup, you convince people that this new price discovery, this is the go. When it's old business, meaning it's short cover rally, you're being driven based off the weak shorts. Does that make a difference? Like net new buyers come in, they're gonna buy with volume. When you're short covering, right? You hit your short and you're buying to cover, hence the cover rally just goes, and it looks like it's kind of dragging day to day, right? So if you look at Friday, for instance, on a smaller time frame, so if you look at this, how's volume on Friday?
Pretty low until the end.
Pretty low till the end, and then look at the price action as you're going higher from this point to here. What happened to volume?
Stagnated.
Yeah, it was just going lower and lower. So there's an anomaly as you're going higher. The participation is not there. So I would say this is a short cover rally. If you're buying here, what should you see in volume? You should see participation come in, and especially at the top. When you're kind of cracking here, they had a little bit of an uptick at 340 on buying, but then they really got smashed. The last 30 minutes in terms of volume, and that's normal, right? 350, the order, the balancing comes in, and you have this price typically being driven by a lot of volume. But pay attention to how many times you had this much volume in past, I don't know, let's say this is all of 2026. How much volume did you have that traded here? How many days or above?
About like 10 days.
You only had one day that was higher, which was this day here.
Oh,
So take a look here. So we had like right here, but that day you had probably about 150,000 lots being traded, and here in 2026, it only happened one time, which was here. So just interesting, right? That as you arrived at this level, your buying is stopping. And then when you do a market auction theory, right, when you're at the auction itself and the guy goes 69.50 and it's quick and aggressive, you raise your hand, they note you down that you're at 69.50, quickly comes in 69.80, and if that becomes quick and there's participation, not only let's say me and you bidding on it, but there's other people, other participants like, oh yeah, raise my hand. As you see less people participate, what do you expect with the auction to do? We're gonna get a winner, right? One of us is gonna win. And that conclusion that comes to an end of that auction, and maybe we're watching now to see if it starts a new one. Because if you're not getting buyers at the top at the levels, what do you have to do with the price?
Bring it down to find new buyers.
Yeah, you have to offer a lower price. Then you go 69.50, and somebody's like, okay, maybe one, and then they're like, okay, 69.55, and nobody raised their hand. Then they have to go below 69.50 and offer the price, and so on. Okay. Let's see. Just make sure if you're investing, right? There's a difference between trading and investing, right? Let's say a lot of people might confuse it, but it's probably not good to do that. A long time frame buyer will not be attractive to a long term seller. Is that fairly clear? Do we need to beat this around too much, this piece? This is a pretty rare sight. So who did the long term sellers sell it to?
The short terms.
Yeah, they buy it to the short term buyers. How do they do that? One is they use price is a discovery tool, right? They use the price, and then at the top, you guys get the best news in the world, or we all do, right? Everything's great. When the price reaches the bottom, what happens to the news? They
Everything's
give you
bad.
everything turns to be really, really bad at the bottom, and everything's peachy and green at the top. Because what do they need at the top? If I have 50 million shares to sell, and that some of these boys have, can I sell that to a single person in retail?
No.
No. So what they have to do here is they have to engage you. They have to tell you the market's great. The Bitcoin is a buy. You need president, his son, his wife, his kid to tweet and say, "Hey guys, buy the Bitcoin at 120." And then poor people, what do? They're like, "Oh man, I gotta listen to this guy. Last time he said it, worked out great." But remember, what's the rule of maximizing profit? You go higher and you lift the price, and then you pay attention if you have the demand. When demand slows down, what do? Well, you need a boost of confidence, and then they say buy, and what's that guy, Jim Cramer or Kramer? He says buy, and then immediately the stock goes boop. The
The
orders
inverse
are
Kramer.
filled, and then basically you sell off. So if you read the Intelligent Investor book, right, or listen to Warren Buffett, everybody says buy, when there's blood in the street. And my style is that I research companies and I look for opportunities to buy, right? I'm looking to buy at a discount, not necessarily at a premium of something. So when you guys are trading, for instance, let's say equities, and there's one that I'm watching here. So for me, I posted this a few times for you guys on Oracle. What were they talking about Oracle at these prices? If you have any AI tools, just ask you what were Oracle news when we were here. What was the talk of Oracle here? Anyone think that Oracle is going to have a little bit of a trouble paying their loans? Nobody had that. Nobody thought about it, but it was all great news. Now, when the stock has been decimated from that level, right? So you're talking about from here to here, you're getting a 60% discount. People, you don't want to buy here, but you prefer to buy it at the top. Why is that? It's just the psychology, right? It's the psychology of humans. They like to be with the masses and then they dump. They go down with the masses. But when there's no, they don't want you competing with shares here. Why is that? Well, they let you have it at the top of the distribution. They emptied out their warehouse at the top by you hitting, 150 shares buy and 10 million of us do that. It gives them the opportunity to get out. Now they scare you because they don't want competition to compete with you to buy it. So you have to identify those levels, whether you're using volume profile or whatever that might be. You're looking to see where's that level that we're looking to buy. And this level, for instance, for me was a multi-year, I would say POC. Because if you think about what happened before, is that we were building value here. We came back, same concept that we just talked about. We came back, retested that, and then we said, no, we're not interested. And the key point here is when they cleared the prior highs right here, they're telling you that this demand was pretty strong. So now when you think about the price action, right, just naked price action, what is happening here? So let's just kind of talk about the Wyckoff theory and just to reestablish that you guys are following so far everything. So let's talk about this. So what they do here is they accumulate it, right? They accumulate it, they do a little test here, and they're like, oh yeah, we got it. And then what did they do here? What is this called typically?
Liquidity sweep, I guess.
Yeah, that's called, a spring, right? They come here and your free tools that you guys utilize, like Robinhood, and you put a stop loss on Robinhood at 41.40 here. Let's say this is your stop loss. What's the other one that's free? I forgot it. Bull, whatever. I forgot the Bull View or what's it called?
Weeble.
Weeble. But then what happens is this, right? They're like, they sell your data to Citadel, they sell it to other big boys, and they're like, hey guys, if we can kind of do the short laddering here and we can sweep this price 41, there's enough liquidity there to fill your orders. And what do you think these guys say? Oh, don't fuck the retail. Let's be fair. No, they're like, let's give it to them. What they do is they come in and they grab your shares, they trigger your stop loss. When they trigger your stop loss, you sell and they buy. Does that make sense? Conceptually? So they trigger it and then they made new all-time highs, right? They ran it aggressively, then they pulled back again. A new batch of buyers comes in, they clear, make new higher highs. So this is just naked trading. You're making new highs here. And then you continue, you accumulate, you put in new highs again, you put new highs in, and then it's time to sell news, right? Then you come in and you're like, man, this is the best company in the world. We're going to have all the data centers in the world for you. And then you have a candle that looks like this. So what is this candle telling you on the weekly right now?
Long-term sellers are coming in.
Well, let's add this zone here. Why are we adding this zone here? Why was this here?
It's a low volume area.
Yeah, low volume area. We just talked about it, so we know. Let me make this a little bigger. Yeah. Switch this to about squarish looking. So now, if you look, they had a lot of volume here at the top. Once you lost this, you're in trouble. Now you're coming all the way down. Look, all the way to this POC of this breakout, and that's a good level to buy. When you go and revert, like you lost this level where 68% of the volume is being traded here. That's our value area, correct? 68. Some people use 70%. I use 68% here. So that's telling us that 68% of the volume was here. What does that tell you about this volume at the top? And I guess this little bit volume here. Is there a lot of volume there? I can't disagree that they built value here. There's an HVN, they're happy, but as soon as they lost it, typically what that means, you're going to go revert to the mean, and then ultimately you're going to give us that reversal all the way probably to the POC, and that's kind of where we wanted to buy it. So in higher time frames, when I trade for stocks, when this happens like this, I'm looking to add here, and hence why I wrote this is the buy zone on the equity itself. So I'm a long-term buyer. And do you think a long-term seller is selling this to me here?
Not unless they're about to get fired.
Exactly. That hedge fund manager would be probably gone the next day, right? And he doesn't have inventory here. His inventory was depleted at the top. He sold everything to retail based on news and manipulation and upgrades. And if you look at JP Morgan, they're actually pretty notorious for this. Typically, they upgrade right around value area highs. You get all sorts of upgrades from Bank of America, Tesla's a initiation buy, target 1,000. Right? They get them at the levels that are at the extreme highs. And does it make sense why they do that now? Did I convey the point? Why do they do that? Well, they need liquidity to exit. And the better job they do persuading you to get in, the easier it is for them to sell it. Okay. The price is just a discovery tool. And I've done experiments with you guys where I actually went on Facebook. If you guys remember, my wife was selling a wine fridge. I put a really low price of a fridge that's worth about $500, and I think I put $50. I was bombarded with like 1,200 messages on Marketplace. So what should I do as a buyer, as a seller of a product?
Raise prices until one person's willing to pay.
Yeah, I removed it off the listing, and then I put 250. I still got maybe 1/3 of the people. So I knew immediately that my sweet spot for price is where? Is it below 250 or above?
Above.
Well, and I sold it for like almost $400, and that's the kind of the maximizing of profits. You're watching to see where it slows down, right? I'm trying to get a specific bike for my son. It's called a boom bike. I don't know if anyone has kids or not, but they're really good, Swiss-made bikes for kids. They go about $500, right? And when you have younger kids, you don't want to have a lot of $500 bikes because they grow out of it. So I typically, being frugal, I'm like, I'm not going to give $500 for a bike. I'd like to buy it cheaper. But that thing holds value better than anything else I've seen. They're like brand new is 500. They're like 485. So what does that tell you about the quality of the product, the market option theory? This product might not depreciate as much. People still find value at it, and they're willing to pay for it. Your value perception versus mine might be different, and so does market participants, right? And price is used to figure out do you accept the price or not. And when you look at other, I would say, products in the world that everybody uses, you look at iPhones. How many of you bought a brand new iPhone, 18 or whatever it came out? Did everybody go and buy it for $1,300? Sounds like you guys did not.
No, I didn't.
So if you don't buy it, remember, following the masses and buying and staying in trend is one. But most people will be like, I have my iPhone 12 and now the iPhone 18 is much better camera, but is that valuable to me? Unless you're some photographer or whatnot, I don't think you're going to get any better, right? You're going to take the same pictures that you took before. So same thing here, right? But when you discount the price, what are you doing? What does, when the stock price goes down, as we just saw with Oracle, they're offering at a discount right here. This is a discounted price. So now it's like, okay, well, this is at a discount. Is it going to stay here forever? If it's discounted and perception of value is to buy,
No, let's go back up.
demand will be there. So we're going to shut off the selling and we're going to look for buying. So if you look at this day here, is this enough convincing for you to go buy here? Tell you what happens here. Anyone want to bet that we're going to be at 152 this week or next? Odds are we're going to auction here, but we want to see if they put in the real access low on this day. If they didn't put an access low, this is not done yet. Maybe if you're lucky, like if you're super lucky to get this stock somewhere around here, would be amazing. And why is that?
That's where institutional buying would come in.
Institutional buying will also come in. So could you take a dabble here and buy some shares knowing that you can go here? Yeah, certainly. But you're a long-term investor. You're not a short-term trader buying from a long-term seller here. And your mindset has to change. When you look at stuff, what you're trading and why, you have to adapt that. If you're buying at 140, you have to have some ability to add at certain levels that you're aware of. Because what if it bounces here and let's say ignores this level and it goes to 170? I mean, that's pretty decent return. That's not bad. Talking about 21%. You can definitely do that. But you buy a little bit here, they drop here, you add a little bit more here, dip, let's say, to this HVN. It's sitting right here. And then that
Hot
would
mic,
be,
JD. JD, you got a hot mic.
and if you go to this level, that would be a really good buy. And that would be because we're buying below the value. And we talked about just moments ago, the advantageous people look for what? They like for advantageous prices, right? They want to buy below the value and they want to sell it. Where? Oh, and that's what they did. So now the expected behavior is that if they come here below value is they're going to get back in. And I will too. Okay. So we cover time and volume is basically your activity tool is to confirm the price is being accepted or rejected. The more time and volume you spend at a price that, let's say it's higher, that's confirming that potentially you're gonna accept the price higher. But once you lose that, that can be treated then from Wyckoff theory as a distribution and probably not a bad idea of that price action. Okay. This thing is gonna crap. So we talked about this, the type of participants, aggressive, passive. Any questions on this? I think you guys got this. If you don't, stop, right? Just so we can get some meat. This is probably good to know, and I think a lot of you know when you're above the value, right? Let's say the value area high, expected behavior is selling. Below value is buying. When you're below the value, expected behavior is not to initiate selling. And that's what we saw just earlier when we looked at the higher time frame value areas, right? When we dipped inside the December value area high, November value area high, the price reacted already 3 times there. And, we're finding that they really don't want the price to go inside that previous 2-month bracket.
I know this percentage might be low, but the mindset of buy the dip as it's going down. What's the chances of it being like a trend there, just go breaking down, and you just kind of blow your account just by buying the dip?
Well, you have to know. I mean, again, where are you in the trend day? Are you other time frame participant, or you're a day to day? Are you a short term participant? If you're short term, you're expecting that you're going to have a value from 1-2 days working in your favor. if you see volume is picking up and you're putting in new lows where you got in, your stop loss is pretty tight because in the bracket market you have a really limited risk and reward. And at that point, you should be able to switch from being, let's say, short to long. So if you think about, let's look at SPY. Get SPY on 5 minutes. So I'm just going to turn SVP for a second. So at what point could you have shorted here? And it would have been a pretty well point, like just based on the market, and you would have been wrong eventually. What could you have shorted here on this day?
Testing a 2-day balance value area low.
I think you're talking about like
Yes.
this area, right?
Yeah. Mm-hmm.
Now that would have been good, right? When you see they went inside and they had, they put in some lower lows, they sold off, then they made higher high, they continued breaking the structure. And if you didn't take this profit, then you're most likely going to get stopped. Then you
Mhm.
also, prior to that, you had a 2-day balance. I'm just going to make this smaller. And the 2-day balance is this green zone now. I'm sorry, this purple zone here. So now the prior 2-day, because the market goes from balance to imbalance, and look what they did. When they went to that 2-day balance, what happened? They peaked above, they sold it. Right?
Yeah.
So now when you trade tomorrow, what's the level you would watch to see if you can, let's say you're trading SPY, would this be zone that you're watching? If you don't know anything else from other time frame level, if you lose the zone, what's most likely to happen?
Go back down to, yeah, that one.
Most likely you're going to go here. So if you take this short here, what's your stop loss?
Above the zone, but that seems kind of on
Oh,
ES would be kind of big.
Well, let's say on ES it is, but let's say here you're trading something like this. Is this a good trade?
Yes, sir. More than two.
Very close to 3 to 1. This is a pretty good trade, and one that would be telling you, hey, you lost this POC, you lost the fair price. You're above the 2-day value that you're clearly rejecting now because you came here and then you just gapped up, right? You rejected it. And now if you lose this, you're gonna be again back to the 3-day bracket that you're trading in. That would be a pretty good short just on a day-to-day analysis. I have no idea where anything else is on SPY at this point. And I hope that answers your question, right? Because if I had level that was, say, this was a level right here that was a massive LVN in this zone, would I initiate a trade here? Probably not. Other time frame levels will keep me in alignment with the short-term price action, so I know what to do and how to react.
You mentioned earlier on that particular day that there was initial volume at the beginning of the day, and then it declined as price was moving up, and that was an indication of short selling or short covering.
Mm-hmm.
Are there any other good indicators that there's a short cover rally?
I wouldn't say any other indicators, but in terms of price action, can you tell? Yeah. I mean, the way I would treat it, if this is my fair price, I think this is probably maybe even 2025 POC here. As you're going higher, you went lower. Now you have a short cover rally being set up. How do you do about around major levels where major participants are sitting? If it's new blood and they're aggressive, they should do a pretty good job of breaking those levels or attempting to. Here, for instance, I don't know if they did that right. And then when you look at on, on TPO, turn this a second.
Wait, your previous week value area low, is that the previous week?
This was a previous week area low.
Like not the week we just
No,
had.
no, I
but-
didn't update it. No,
okay.
no, no. Yeah, the
yeah.
one.
Sorry,
yeah,
sorry.
yeah,
I'm tripping.
yeah. Question. So now when you look at this profile, what is this telling you? Here's your daily profile on yes. Gonna remove all of this. Is this a distribution split?
No.
Only
I'm trying to
distribution that you have, where is it?
above the POC
Top?
part.
There's only
With
3
liquids.
TPOs here. All the rest here. This is your what?
Spike.
Okay. If this is our spike, this on a weekly. Save at 30 minutes. Okay. So now if you look, if that's our spike and somehow magically we close right at the spike, tomorrow you have a pretty easy setup in terms of this. Because the structure below is what? Does this look like a pretty good structure?
No, it's very thin.
No, it's terrible.
It's pretty terrible. So I would say that, if they go back down, let's say they lose this level about 33, there's a really good chance they're going to go dump it all the way to the prior day high, which is the level they really want to hold. Why?
Value acceptance.
Yeah, that would mean that they're really trying to accept the value of this 2 days right here. And now you're going to see it kind of held out here and here. So that would be the area that I would look for closing my short right here. You lose this, there's a pretty good chance that you're going to give me that 50 points. And then even if you take, I don't know, 3 MES, 5 MES to test the theory out, it will give you some confidence next time to analyze it and see it the same way. A lot of people, what they do, when they start trading, they're like, man, I'm going to go 10 ES here, right? If your account allows, and then it just beeps above, they get you, and then they do this. And you're like, man, I had the right idea, but you oversized and you killed yourself, right? The market didn't do anything, but you did. So size down, look for opportunities to trade this out, right? Market's telling you right now, if you had the spike, you lose the spike Monday, I'll guarantee you this 80% is going to play out so nicely. It's going to go to the bottom here of 81. And it just repeats a lot. Same patterns. Repeat, and this would be the expected behavior would happen, and then you would look for buyers to step in. If we initiate lower in this case, right? Let's say we go a little bit bearish, right? Then you would need initiation to happen where? Right here. You will want them to initiate. And then is there anything interesting on this prior day where they kind of short color rally from? And here on the bottom that you guys are like, oh, might
Yeah,
be
big
good chance.
excess.
Single print.
Well, this would be almost like I would say a poor low, right? You have a lot of price action and you have the D here stopping. This would be kind of like you're seeing these here. This is a poor low. So if they kind of lose this level, right, 81, and then they start dipping here, there's a pretty good chance that they're going to explore this and fix this poor low. And Brett, to answer your question, the profile here tells me that this was not really serious buying and that they really, really found value somewhere here when they dipped, in the A period. This profile should have looked a lot different if they did, in my opinion. I would say the profile should be somewhere. It should be all the way to the top. I want to see something like this, where these are all really single prints, and this is just a poor structure on this profile. It really is bad.
Thank you, Shorty. I gotta take off early. Thank you.
No worries. So what it looks like, you have a balance, you break out, and you see this profile, for instance. You see this profile, for instance, right here. So I don't know. Look. Does this profile look the same as the one that we had Friday?
Almost.
This one has a lot of, they had a little bit of overlap here, but they closed, they're pretty high and they closed at the high above the POC. Next day they tried to break the balance and then they rejected it. They broke the PDH and they continued. Continues an imbalance. So tomorrow, if you want to continue, what do you need to see?
Peak below and fail.
Like here, if they go to this POC and they defend this tomorrow at 35, that'll be a pretty good long, right? And then you can expect probably to find the access point somewhere around here, about 69.85. And then you guys know that 2025 value, I'm sorry, 2025 high was somewhere around, I think, 94 or something like this. I think it's here. No. I think it's right here. Yeah. About 94 and a quarter. So somewhere around here. I would expect this range to be touched tomorrow if they come here and defend it. And let's say you're wrong, they lose it. Do you stay buying long and you say what you said earlier, that you just keep buying the dip? Would you look for a dip buying opportunities here, or you potentially switch short? Hopefully the answer is you would return short if they don't bounce here and they don't give you a meaningful bounce where they continue breaking the structure. So tomorrow's open will be fairly important, I'd say. Open below this POC, you're rejecting the spike, we're going to dump. Let's say you open above the range tomorrow and then you lose it and you lose this zone, right, between value area high and POC. You lose this, regain it. So it dependent, right? What I'm trying to say is if you open here and you reclaim this, don't go short. You're going to this area. You open here and you lose it quickly, we're looking for a short to drive here. Does that make sense?
Yes.
Yeah.
Not the volume profile, right? So all of this was kind of give you an intro leading to it. And is there anyone that never seen or heard volume profile on the class? Don't be shy, it's okay. Everybody knows volume profile.
Yes.
Well, you have to teach it.
Does anyone really know what volume profile is? Like really, really know?
I do.
Okay, aside from you.
I'm sure you have some traders that are really good and I would say efficient for trading with volume profile. So let's kind of start. Like, what is volume profile? So this is slightly different than those horizontal or vertical bars on the bottom. This one tells you at the particular level how much volume did you have. The higher the node that you have, the more participation you had, the more volume was there. And over time, when you're shifting value, you want to see value shifting and HVNs being built. HVNs basically say we're happy in this price, we're accepting it. When you leave an HVN, typically there's an imbalance, right? That imbalance is called what? LVN. Okay. Point control, I think everybody has a definition of this, so we can speed up some of it. Is just the highest level of volume, right? And when you have a POC that hasn't been touched, those are called what?
VPOC.
Called VPOC. And why do we call them VPOCs?
They haven't been revisited.
They haven't been revisited. So think of this as like a little fountain, right? We found a well, we found the oil here and we popped. They like to revisit VPOCs, right? And typically, if you leave about, let's say, I say between 6 and 8 unvisited POCs or VPOCs, there's a pretty good chance that you're going to come back and fill those guys at some point, right? And you can see here, there was 1, 2, there was 3, there was maybe 4 here. Eventually, they came back and filled every one of them up in this a month or less, 3 weeks. And then unfortunately, TradingView doesn't give you all of it, but there's a lot of VPOCs that they haven't tapped yet. Like, they have, yeah, I guess they did this one here. Oh yeah. Typically, they will tap them right in a short period of time after they're established. It's at least 6 to 8 of those they will be. I like paying attention to VPOCs on a weekly. So, we have the SVP volume profile. Does everybody know how to get to the profiles of volume in TradingView? Is anyone like, oh, I don't know how to get to it?
I need some work in that area. I only use it for TPO mostly. And so
So if
give
you
me-
go under indicators here, right, and you look at technicals, you click that and you click profiles, you're going to have all the ones that you need. So market profiles, your TPO here. Session time, price opportunity, that's the one that you can use here for session, which is market TPO. I don't use auto anchored. Fixed range volume profile, what we do with that one is basically you go here. Let me see, I have it saved right here. Fixed range volume profile. And what that one does is if you select it and you're just interested, like, hey, tell me the volume from here to here, it's 2 points that you selected. And typically I look for either brackets or between points of low and high. So for instance, if I wanted to know from the April lows to, let's say, this high here, how do we distribute the volume? Well, this is the way how we did it, right? And this would be the POC. This is where it got reloaded. So at some point, I'm not saying now, if it was to revisit this price here, that's called volume accumulation setup in terms of volume profile. It's an HVN, and you can see how much time and volume we spent in this area. You almost see 2 big nodes in between there. So this area, when it comes to be revisited, it's probably be a good opportunity to get a really good bounce. Because right now, I'm looking at this. This was a volume here, and you see the value area that they created matches that HVN here. Then you have some single prints. Then if I was to extend this guy all the way to the top, you can click this, click extend, and this would be your FVP. And now you see this massive single distribution being kind of divided here by this one. Then you have the POC along with the value area low. So this whole buildup here, what is it telling you about price? When you think about it, from April lows to where we are now, what is this telling you here? Is this a bearish profile or?
It's bullish. There wasn't a lot of interest at lower prices. They found
No?
value at the higher prices, and now they're trying to
Exactly.
figure out if they want to keep going higher.
Yeah, this is a really good setup, right? I mean, unless we lose this level here from a really super high other time frame view, once they lose this, we're going to start dumping. This is going to be, once you lose this level, it's going to flush because you look at the structures that you have. People are probably terrified buying here at some point. The war tariffs came out and people were like, oh shit, sell. And then they bought it back up and now they're giving you maybe good news or bad news, but you want to pay attention to, and like from other time frame participants, you can use the FVP tool and chart segments of the chart so you can see how's the value shifting. If you're to look at this, here, let's say between here and here, what do we have here? What is this to you guys? It just looks like a bracket, right? So you could just go here, draw an FVP, and see how we behave here. And you see where your value area high is at 20, and the low is somewhere around 52. We haven't been there. We're trying to shift this and hold the POC. So in terms of immediate price action, is this bearish? You're shifting and holding price above POC from September. Is this bearish?
No.
Oh. But what you want to pay attention to when you're going higher, what do you want to look at?
Volume.
You want to pay attention to see if the volume's picking up, and look at this. And the last bit here, there's a lot more interested in selling and volume is picking up. So that's something to know. What is another thing that you can use when you do bracketed markets and you're trading in a bracket like we are now? So we have the FVP, which is fixed volume profile. what else can you add in terms of big levels so that way it simplifies your trading? So if this is the bracket that we're in, I'm just gonna put it right here. And this is our first sigma. Does everybody understand what sigma means?
I don't.
Take that as a yes. If I change this to
One person
90,
said he didn't.
oh, I didn't, how do I not hear these people?
It was kind of quiet, I guess.
So let's talk about that. So when you look at the value area high and low of a volume profile like we are looking at here, within the white area here, shaded area, you see the value area high is at the top, the bottom is value area low. What this is telling us is that 68% of the volume has been traded here. This is 68% of the volume. So this is your first standard deviation high, and this is your first standard deviation low. So you have 34, 34, you add them up, you get 68.2. Your second standard deviation would be you add 13.6, 13.6, so what, about 27% more volume, and that'll be your second standard deviation somewhere around here. And that's what we are doing basically when you do FVP and you look at the volume, we're trying to find where are the second and first standard deviations. And like in this case, this would be second. I'm going to copy that guy and put it right here. So is this the best spot for you to initiate buying here?
No.
No, that's not. You want to keep an eye on this. And if you're really going to buy something, once we come to this zone here, this becomes a really, really green zone. And you're looking to buy somewhere around 66, 63.8, right? Lose it, reclaim. An ideal setup would be, let's say tomorrow they lose this level, they're going to bounce here. Let's say they flush here. It won't look like that, but let's just say flush. They do something like this. This is your opportunity to go long. Because right now, and ideally, what we want to see is we want them to sweep these lows, grab the liquidity, then reclaim this level, and that becomes a really good long. And then you can target again, 66 to 7, about 400 points higher. And I would say that's what you want to pay attention when you're looking at FVP. Of course, you can change this to 99, but you're going to get all-time highs and lows of that range. So here's your third sig and third sig up top. I don't mark it, but it just becomes too much. I care for the first two. And now you're watching to see if you can get that entry to play at these levels. This is a bracket. You play bracketed markets slightly different than when trending markets. Trending markets, you're looking for to see if you can get a retest long, a retest short, depending if you're up or down. Is the market trending here? Market is trending here. Obviously, it's been trending higher since some time. It's going here, higher, and now you see us doing what?
Kind of stalling
Sideways.
out.
We're just kind of stopping here, taking a break. If we agree that this is a breakout, maybe we do see something like this. Retest here would be a long. You do not want to be the initiative buyer on the breakout. What you want to pay attention to, though, as you're trading, you want to know how the volume was when you broke out here. So when you come here and you draw that FVP, I'm just kind of making it up here. If you draw it and there's a nice POC in this range, that's pretty good. Then you use that POC and the range breakout, and it becomes really nice long, and then you can target some SPY options or long equities in that area. So that's FVP. If you're going down and you look at the technicals, right, session volume profile or SVP, I'm not going to add it just so it doesn't add more. This is your day to day. It basically tells you for this day on Friday, this is how your volume was distributed. You had a distribution here, you had a little bit of a split here, then you had a little bit of distribution here, and your POCs at the top. And where did we close?
Above the value area.
Above the value area, which is telling you what about potential continuation tomorrow.
It's a little bullish.
It's called neutral bullish profile for tomorrow. There's a high chance they're going to continue. But if they lose, I'm not trying to bring in spike, but if they lose the spike, and let's say they lose this POC, there's an 80% chance that you're going to catch this right here, which would be pretty good for a lot of you guys. 48 points, I think that would be nice.
So that's session volume profile, right?
This is just day to day, and usually I look at it 30 minutes. Yes.
Okay. How do you move to like weekly and monthly?
So we'll get there in a second.
Okay, sorry.
Does everybody understand how you use SVP day to day and how to get there? And same thing, what you're doing, directional performance of volume profiles is based on three things. VA width, and these three things, when you think about value here, value is obviously doing what? The width is wider than previous. The placement is higher highs. The value area low shifted, value area high shifted. We're back obviously in a balance, but that's irrelevant for point of this. And then volume, how's volume? Is volume confirm this? 300 points run?
No.
Not really. I would say, there's, you're in morning, they're above average, but then when you look at the daily profile here, it finished above the average, but this is just a massive candle. It doesn't really, relatively to other candles, doesn't check out. Okay. So use these three questions to kind of see, is the market going, where's market trying to go? And then these three questions help you answer whether it's correct and whether it checks out. Tomorrow, right? If you just pay attention to like from here to here, how many value area highs and extremes do you have? Like, pay attention to like, let's say between this one and here, would this be a decent zone for them to crack above?
Yeah, it looks like it.
Should be beautiful, right? And we know, let's say we know something. There was an LVN there on the higher time frame, right? So this becomes a pretty critical zone to watch for tomorrow. And so far it's bullish, but if you can't crack this or you crack and lose, I would say you're gonna hit these levels here fairly quickly. There's multiple levels here. Just looking at dailies, you're looking at 6903 is doable, and then value area low is at 85. It should be your 80% rule. So that's your SVPs. If you're interested to find, let's say, PVPs is a periodic volume profile. That's this one here, and I use this one quite a bit when I'm starting my analysis. So when I look at the data from scratch, let's say right now, preparing for tomorrow, I turn on the PVP, and there's some settings that you can play around with. If you choose period, the 1 week, it's just going to show you a weekly profile. If I choose this and I pick 1 month, it's going to be there. And you want to be at 4 hours to daily in terms of time frames. And I typically like to look at this on ETH, right, on volume profile. So if you look at this on the weekly, I look at the volume profile in 65 minutes. You can go 1 hour. It's fine if you don't have these increments. But here's this price action here. And we talked about, how wild they could get, right? If you guys remember, we said on the weekly time frame, we're looking to see, can they crack? Let me show you what we had. So we were talking about the weekly. Let me make sure this is weekly. Monthly, that didn't look right. So here was our weekly low, and Erica during the class said, or watch list said, well, if we crack this below, we're going to start, framing down. We all agreed, but if you reclaim it, that's extremely bullish, right? And then we looked at the monthlies, and that's where we kind of made assumption that because we moved so much that day with the gap down, that if you're to go past the weekly low, which was here, we will take a look at the monthly low, which was 20 something 2. So this is your monthly low. And here's your weekly low. So now, what is this telling you about the price? Well, they're rejecting this. They went to the monthly lows, they swept it. the December value area low kind of peaked below, but they never swept it. So now if they can get back inside this January, right here, because I am on 1 month, means monthly profile. If I want a quarterly, I can change this to 3 months. Now I'll print quarterly profile here. It's going to combine it. So here's your quarterly value area high. So this will be your Q4 of 2025. This will be your Q1 of 26. So now I know, at least where I don't want to trade. I know I'm not really interested in this price action here because it's going to be pretty wild for a day trader. But if you lose this level, let's say another time frame analysis, now I know my quarterly value area highs here. And I know my developing quarterly value area low is here at 28. And my set, I would say, here and change it to monthly, you'll be able to see that your 37 is what? Why is 37 going to play a big role tomorrow from other time frame participants?
That's a value area low.
Yeah, it's a pretty big, important January value area low. So if they try to get in and they tap this January, POC here, which was right around 55, 62. You tap the January POC and let's say you lose this 37, and we know you had a spike yesterday. This should give you a little bit more confidence to short, right? Especially if they lose that one. You can short it and then look for opportunities where to cover. As of right now, you see what's happening in the value in terms of the monthlies. What is happening? You had lowercase b, you shifted it, right? Opposite, basically just flipped to 180. And now you have value that's inside of December and inside, January value. So for us, it's really about January value area low, and then do you crack back inside of 6891? Do you get inside here? This little zone right here. So if you get inside this zone, then we know that most likely you're going to go back at least here to about 821. Developing value area a little higher. You would keep that for now here at 43. So PVP used for monthly, or if you look at the weeklies, you could look at 12 months, right? I do that as well. So if I put 12 months, I change this. You can probably go on a weekly. Turn on some candles you can see, and here's your profile. So as a buyer, is this the spot where you want to buy this?
No.
The answer would be hell no. You do not want to be buying here as an investor. If you're looking at a long-term investor, this would be a pretty good buy here, right? Are there levels in between that you can identify using LVNs and strategies? Yes. But ultimately, if they come here at some point, let's say something happens and they sell and they give you this, this becomes a pretty good buy. And I wouldn't fight it too much, right? That'd be a nice level. That was a prior value. And you see it here as well. You trade it here happily. You have an LVN, happily. So if they lose that and they give you this, it's pretty good on the yearly profile analysis, right? This is not a spot to initiate long. And here's your 2025 POC here. About 46. Does that help with PVP?
Yeah, that's very helpful. Thank you. Thank you.
But that covers the components, I would say, of how to use the tool, whether you're using TradingView. If you need help on Thinkorswim, I can help you. I do have some custom scripts. If you're using TOS, just post a message you need it, and then I'll give you guys some scripts that I have for volume profile and Thinkorswim. I use Thinkorswim for trading futures as well as some shares. And I have Fidelity, right? Some of the investments, long-term accounts for my kids and myself. But I have multiple platforms, right? I also use TradeStation for trading futures just because of the commissions that I get. Sometimes are much better off than Thinkorswim. But all of these tools will yield, I would say, similar. A lot of them, I would say, standardized in what they offer in terms of PVP or fixed profile. They might call it different names. But I would say TOS is probably one of the worst ones in terms of being flexible. So that's why I have some custom stuff there. So any questions on value and what that means and related to a bell curve when you use, standard deviations and how to trade them?
So when it breaks the first sig and goes to second sig, is it?
You're watching for a loss of first sig short.
I see. So if I were to trade with the bell curve, should I be trying to enter at every sig?
I don't. If you go above the second sig and you lose it, can you short it there? Yes. Is there a risk that it's going to bounce at the first standard deviation? Yes. But you have a little bit more reward in that type of play. More secure play is that you go below the first sig, then I target the mean, which would be the POC.
Gotcha. Thank you.
This is just me progressing over time, 20s, 30s, 40s, LVN, all the way to HVN. The higher the volume, the higher the node, the volume profile, they come to retest those levels. LVNs act almost like support and resistance and a separator of value.
Did my wife send you those pictures?
Yeah.
All right, I'm gonna have to talk to her
I'm
about
somewhere here in between.
that. I'm on the left.
I think as you get older, you get more HVNs too, unless you're really active. So this is covered here, the volume profile types. I just kind of went through it. Visible range, if I have a market profile up, like if I have a market profile up, if I'm using market profile for analysis day to day, I typically will have, I will use a VRVP here on the right to help me analyze the data. Right? So here I'm on the weekly, and you can see if you can't from this class identify where a big point will be if the price comes back, then something I'm doing is not right. If you can't tell that this is going to be a huge level of retest when we come here, and I think we're going to auction here this year. And I say that just based on, let's say you lose this level, this is doable. And that's only 9%, guys. I know it's like, oh my God, that's a lot. No, that's nothing. We've had pullbacks as this one that yielded a lot more. I would say sell off here about 20-something%. And that's a pretty good chunk. And then look where we bounced when we came there. So you see how we came to this LVN in a massive volume area here. How they defended that pretty nicely. Also, prior all-time high came. But this kind of gives you a clear view. If you zoom out and identify the nodes based on these levels, I think you could eventually save yourself a lot of headaches. And take a look here. Now you can clearly see where they are. There's one sitting right here. You have some sitting right here where we bounce, and look at this massive one here on the bottom at 3,000. I won't say we'll be here sooner than later, but we will visit this area at some point. This will be tapped. Okay. So we talked about this, and I have a video here. If you guys click on it, click play when you review it, and it'll cover, again, what I just covered with you guys. First Sigma, how to play it. It gives you the breakdown of the, the Gaussian curve here, the bell curve, so you can kind of understand it more. But there's a video in here that focuses only on standard deviations for about 15 minutes. Here's the visual in case you struggle still. Where you guys were education-wise, but here's your third standard deviation, how to play it. As mentioned in the video, you can short at the tops, peak aboves, and losses of third and second. You watch out for the first. Once you lose first standard deviation, there's a pretty good chance you're going to go to the POC. Losing this opens up to the opposite, right? First sig, then you have second and third, and you're looking to see if the second and third standard deviations, because that's where other time frame participants step in. Usually price is fairly advantageous at those extremes, and they look to step in. And then, your risk and reward your reward here is pretty high, and so is the risk that they might continue. But if you're a long-term investor, it can be pretty good setups, right? And we've used it, even for options in terms of setups here. If you're gonna print any slides out of this deck to have on your PC or notebooks, this is a pretty good slide, right? If the stock price opens above the value area and then falls back inside the value area, this is a strong bear signal. How can you use this in your trading tomorrow or day after? Well, if we open above it, lose it, it sets up 80%. I'm not going to go through every single one here because I think it will be a good stopping point just because of the time. But we can pick up from the value and opening types. And once you understand and can recognize these types immediately, I think your trading will just naturally go up maybe 50% higher than if you add the components of the day types that we're going to talk about here. In the next class, we can do a Sunday, and you understand and not only memorize these points, but actually understand to recognize it during the day when you're trading. It will make your life as a trader much easier because you'll be on the right side of understanding what the market is doing and the behavior, who's in control, and what you can expect when those are in control. I think this would be probably a good point to stop and see, what is your feedback for the class? That did you learn something today that you didn't know? And then what do you guys want me to focus besides continuing from value onwards? Is there anything else that was missed that would be helpful?
I guess my question would be like we go over volume profile today, but then during the day, how do I waging in like market profile and volume profile, and which one should I use? Like say when I analyze for like last Friday's activity, like which one, like if they have different value area, which one I should like consider and put more weight on?
How many times do they have a really different value? So let's bring them both up. So here's a daily, and here's a daily here as well. And we'll just swap them, put one next to another. So let's focus on this one. Your value area low on TPO is at 94. Here is at 87. So 7 points apart. This one here is probably about same point, 7 points apart. The day prior, I would say it's fairly close. Same. You're not going to deviate a whole lot between the two on values. I typically like to use POCs from volume profile, and you can use definitely value area highs based on time because they also have pretty clear indications of access high and access low.
Yeah.
So you can combine it that way. But I look at them honestly in parallel. Am I oblivious to, let's say, this level here and this level match here, or for the day, right? If you look at this, value area highs right here at 42, and this one is at 46, which access highs here anyways, or spike in our case. I'm aware of it, and you aware of it, and I typically have both kind of in parallel on one of the screens so I can see, right? I would not short this either way until this POC is lost.
Got you.
But I look at odds. I look at both of them in parallel. TPO sometimes gives you slightly different data than market profile during the day, right? It can give you a lot of
Yeah.
single trends.
Yeah,
It
yeah,
can
yeah.
give you some, MGIs, that volume profile. Like for instance, if you look at volume profile here, you can see that this is, access, right? This is a buying tail. This is imbalance. If you look here, there's when you look at the volume, it's not clear what happened, right? You don't know if it stalled and stopped. But if I look at TPO, I can see that this was a spike higher.
Yeah,
And then
yeah.
I
I feel
have
like
a setup to play both of them, right? I don't ignore one versus the other.
yeah, I feel like for intraday trading, like when it's developing, the market profile, especially when it comes to the notch and then the high concentrated TPO points, it usually like give you trading opportunities better
Right.
compared to the market. Yeah.
I agree. And then typically what I like to do when we start the day, especially overnight session, and let's do it here for a second so you guys kind of see. If you look at the overnight session here, started here Thursday. This was kind of the 6 p.m. This is your low of the prior day, right? I'm sorry, actually low was here, right here. If this is the low, look how they traded here overnight, right? And then your overnight low is sitting at 67.50. If you were to go up and let's just grab from here to here, what this looks like, there's really not a lot of volume here. So now, when you think about
Yeah.
this, if they had some nice setups here. So let's say if I just want to, I'm interested to know from here to the top, the volumes, the POC is still pretty high up there, right? Losing that POC is going to be trouble for the Bulls. So that's where I would watch to be a fight tomorrow, like 32 level, right? And then if I'm interested in specific, right, trend between swing high and swing low, let's say this is the one I'm interested in, and let's say I go to this level here, because this feels here like it consolidated. Make sure it's not extending. So if I look at this level, I'm just looking from this candle to the first candle, because right here, this is bullshit, right? I mean, they're just doing consolidation. So of course the POC is going to shift because you have a lot of trading happening there. But look at this level. If I had this, if I was trading this off a volume profile solely, I would look at this for a pullback on this day. When the pullback was there, I would use this level from POC for a long, which should be a reload level. And if you look at the volume, that's where a large volume came in before they had higher highs.
Makes sense.
So
Yeah.
I can use it interchangeably. They're telling me slightly different, I would say pieces of data, right? And I'm looking to see how's the volume shifting between areas. And are you interested in certain area? Where's the volume coming in? For instance, like right now, if I just pay attention to here, I'm interested just naked trading, right? I'm interested to see like what do you do in this area? Can you hold this area right now? Well, if you can hold this area, where can I expect the bounce? Right? Can I find a bounce area here based on TPO or volume profile and see if TPO maybe has single prints in between? We know they do, right? Or if there's a high volume node that I can find somewhere in between. And look where the high volume node is, right at the value of the low of that range. So they're a pretty big level, right? So now I have some, I would say, confluence between the two. Bracket POC, you lose it, maybe you lose it, reclaim. That would be a long if you want to be on a safe side. Lose it, retest, and that would be a short. So I can use that, but then if there are single prints and other MGI that's being produced, you can combine that. That's powerful when you combine it.
Yeah. You talked about conference, and then I'm pretty sure that's one of them.
Yeah, exactly. So I think we'll stop here. I think next class, and then I can kind of annotate the charts a little bit more frequently, especially tomorrow, right? Because I think you guys have a really good lesson in tomorrow that's going to happen. How do we open? Are we opening above the value? Are we opening above the prior day range? If you are, you're watching PDH or PDL if you're opening below. If you're opening between range high and the value area high, that sometimes can be tricky, but that doesn't show the biggest confidence from the bulls. And then if you lose that POC, I think you have an opportunity to really slice down, because I think that short cover rally from Friday was pretty wild. Okay. All right, well, hopefully you guys had a good session. I'll schedule the one for next Sunday, and we'll focus from where we stopped today, which is value area shifts and opening types.
Awesome. Thank you, Shorty.
Thank you.
Guys,
Thank
Thank
you.
you.
Thank you.